This is CRE Deep Dive, hosted by Dennis Bamford. We go behind the scenes of high-level commercial real estate, breaking down deal structures and advanced capital strategies, including self-directed IRAs that move investors from Wall Street into real assets, real deals, real execution, real control over your wealth. Let's get into it.
Welcome, Matt Moore, Business Development Manager at CamaPlan. I appreciate you coming on and asking or answering some of the questions that I have for you.
Absolutely.
Maybe you could tell us a little bit how you got into the industry, maybe, and a little bit about yourself, and then how you're working with CamaPlan is.
Yeah, absolutely. So CamaPlan is a self-directed IRA administrator based out of Ambler, Pennsylvania. It's co-owned by Carl Fisher and Maggie Polisano. We have thousands of clients across the country, and we've been around for just over 2 decades now. We opened the doors officially under the CamaPlan name in 2004. What CamaPlan does as a self-directed IRA administrator is help clients direct their tax advantage retirement capital into alternative or private investments. How I joined CamaPlan was actually because I was on the capital raising side, and I was working with a debt product. I had investors who would use their self-directed IRAs to deploy that tax advantage capital into the investment opportunity that I had, and I met CamaPlan through that, and they said, we'd love for you to join us and build the relationships that we have with investment sponsors and basically lead our business development strategy on that side.
Awesome. That's cool. You got sucked in with the whole thing. That's awesome.
Exactly.
Let's see. Maybe the first question we'll do is, what is the average processing time when you receive somebody's rollover check?
Sure. When you open up a self-directed IRA, there's basically 3 ways to put funds into it. You can put in brand new cash, so that would be a contribution. You're limited to $7,500 now in 2026. If you think about the investments that a lot of people do, they're going to buy real estate, or they're going to invest in like a debt fund, or they're going to buy notes, things like that. Usually the amount of capital that they're deploying is going to be much more than just that $7,500. So where most people fund their account is either going to be from a rollover from an old 401k, for example, or a transfer from an existing IRA. With the rollover, for example, if I have an employer I previously worked at, so I'm no longer with that employer, or I'm over 59 and a half, I can move that money out of the 401k with that old employer and roll it over into a retirement account with CamaPlan. Same sort of thing with a transfer. I have an IRA at Schwab or Fidelity, someone like that, and I want to put some of that money into a deal that Schwab or Fidelity won't hold, then I need to transfer that money over to my CamaPlan account. So the whole process is usually we estimate about 2 to 3 weeks. It takes 15 minutes to open your account with CamaPlan. It takes about 2 weeks, or can take 2 weeks, to move the money either from the old 401k via rollover or from the existing IRA via transfer. Just that's the industry standard. We can't control that. And then once the money's moved over, you complete the investment paperwork and you deploy that capital into the deal.
Okay. You touched on an old 401k from an employer. Maybe could you go into just a little bit more detail on how that would look? Is it just the same as if you were taking a 401k that you had that's current and rolling it over, or there's any special paperwork that you would have to do for an old one from an old employer?
Yep. So good question. Generally speaking, when people are thinking about moving money from a 401k, you either have to no longer be employed with that employer, or you have to be over 59 and a half, which over 59 and a half is when the IRS says you can access your retirement accounts without any kind of penalty. Usually, the plans that these companies have created, like with ADP, for example, the plan has been agreed upon with the employer and the plan administrator so that the money has to stay in that account. It can't be moved to another custodian. So there are some instances where a plan will allow the participants, the employees, to move their money to another custodian, like CamaPlan, while they're still employed with that company and they're under 59 and a half. But in general, the money has to stay there until the employer leaves the company or until they're over 59 and a half. I'll give myself an example. I had an old 403b. I was working at a nonprofit. I no longer worked there, so it was just out there. So I had this old 403b there. The nonprofit still exists, but I'm no longer an employee there, so I wanted to move that money out of that plan into my CamaPlan self-directed IRA. So I went, opened my CamaPlan account, went to the administrator's website. It was a completely online process. Said that I wanted to roll my money over. I entered in my CamaPlan information, and they sent a check for the amount that I rolled over.
To CamaPlan, not you.
Correct, to CamaPlan. But
Yeah.
great
Okay.
question. There's often an option to on how you want to send the money, and or there's an option about whether you're going to send it to your custodian or will it come to you first. And
Yeah.
if it comes to you first, then you'll receive it, but you need to get it back into a retirement account in about 60 days in order to avoid a penalty. So that's a very good question. And the other thing I was going to say is sometimes you don't get the option. Sometimes the plan will just automatically send you the check, and so you need to be, ready for it so that you can make sure you get it into the IRA that you've opened to receive the money.
Yeah. And so, with that being said, the first step before you start trying to move that money is to set up the Camel plan so it'll be ready for that. So you won't
Exactly.
be, yeah, so you won't be under the gun. 60 days, you can get it done. But if it's that 2 weeks that it takes to get everything set up and ready to go, you don't want to be messing around.
Yeah, and I don't want to make something seem more like over dramatic. Oh, the IRS is going to be pounding on your door, waiting outside, wanting you to slip up. But at the same time, you don't want to suffer a penalty with them. So it's really just better for the money if you have the option to go from plan over to the custodian so you don't have to worry about it, or if they are going to send it to you because that's the only option, just like you said, you already have the account open. Usually you have to tell the existing plan your account anyway that it's going to go into. So you want to have that all taken care of so that when you get the money via the check, you can forward it along to CamaPlan, for example.
Yeah. And that penalty is how much, what's the percentage of the penalty?
It would be considered a distribution at that time. You would get a 10% penalty plus it would be a 10% penalty plus you'd be taxed on it based upon your income level at that time.
Okay. All right. So something that you don't want.
Nope.
Yeah. All right. And this one here is, I believe you're going to be able to fill this one. So it's if someone was in service and they took a loan out for their 401k, would they be able to roll that over into a self-directed IRA?
Yeah, like 401ks, a lot of 401ks have an option to take a loan out for yourself. Basically take a personal loan that you can use and then there's some kind of repayment plan, there's an interest rate associated with it so that you pay the money back to the 401k. You wouldn't move, you wouldn't take that loan and put it into a self-directed IRA because at the end of the day, in a very like the most basic level, you're going to be limited to how you can fund the loan, or excuse me, how you can fund the IRA. So earlier I said you can either do cash contribution, you can do a transfer, or you can do a rollover. So if you're taking cash, even though it's coming from a 401k, to our eyes, you're trying to take cash and put it into your IRA. You're not, you can't put any, you can't contribute any cash more than 7,500. That's the IRS's limit. So you can't just take that $50,000 loan or whatever you're taking and push it into a self-directed IRA. So the answer is no, you can't do that.
Okay. All right. So the only way, so anytime you have cash, the highest amount that you can put cash into your self-directed IRA or probably any 401k IRA is $7,500 a year.
When the highest amount that you can contribute in 2026 to an IRA is 7,500
Okay.
dollars, and then there's a catch-up limit if you're
Catch
over
it. Yeah.
50, if you're over 50, so you can contribute as much as $8,600.
Okay. All right. All right. All right. Awesome. Let's see. Do you want to go over some of the fee structure
Yeah, absolutely. I think that the fees are something that we get asked a lot about by clients, and it can sometimes be a sticking point, frankly. And the thing you got to realize with fees is that we are charging fees. That's how we make our money, is the fees. But on your 401k or your IRA at one of the larger brokerages, they're definitely charging you fees as well. It's just it's less apparent. Whereas, and usually it's based upon the total account value. So it's not only more hidden, but it's also a lot more than our fees. In general, our fees at CamaPlan are pretty low. So we charge $300 per asset if you choose the asset-based model. So what does that mean? Let's say I was gonna put $50,000 and I was gonna buy a note, for example. I would have my $50,000, and I'll start actually from the very beginning. Let's say I had $50,000 in an old 401k, and I'm gonna move that money over. So I open the account, like I said, I go to my old 401k, I move that $50,000 over, and now I'm gonna buy this mortgage note. So to hold that mortgage note, CamaPlan will charge $300 annually. We're also going to charge a one-time account opening fee of $75 and then a one-time transaction fee of $150. So $75 to open the account, $150 one time to make that transaction to purchase the note, and then $300 annually, and then it will always be $300 thereafter. And if you are holding the note, and or better yet, if you are holding a piece of real estate, for example, and the real estate goes up in value because it appreciates, we don't start charging you more money because the real estate grew in value. It's still just going to be that $300 flat fee. If you went and you bought another note or you bought another piece of real estate and you had two assets now, then we would charge you another $300. So now it's $600 annually. The rough kind of math that we see it is, in general, the fees usually come out to less than 0.5% of the total account value, which is significantly less than the 1 to 3% you might be
yeah.
getting charged with an advisor or something.
Yeah, for sure. I totally agree. Totally agree. Okay, so you were talking about buying a note, and so that kind of leads to the LLC checkbook. I'd like maybe explain a solo 401k, if the differences between the two, and then if you're buying notes or you own property, how far away? Let's see. What are some of the prohibited transactions? If you have an LLC checkbook and you own a piece of property, where are these prohibited transactions? Would maybe connect that together so
Yeah,
people have a
absolutely.
better understanding so they won't get in trouble.
Of course, prohibited transactions have to do with both the prohibited assets that you are not allowed to hold inside of an IRA, as well as the way that the assets are managed inside of an IRA. So what that means is, starting off on the first, prohibited assets, really they're just there's two things that you can't hold inside of an IRA: collectibles and life insurance policies. There's a couple of other more like nuances there, but just to boil it down for the sake of the conversation, it's really collectibles and life insurance policies is what the IRS doesn't want to see inside your IRA. No rugs or baseball cards, things like that.
Okay.
But there's the other side of the prohibited coin, which are prohibited transactions. And the thing to think about here is that everything needs to be at arm's length. Your IRA is its own entity, and the versus you are you're your own person, right? Your IRA can't benefit from you personally, nor can you benefit from your IRA. And I like to use real estate a lot because it illustrates what I mean. So let's say I have an investment property inside my IRA, and there needs to be a toilet that's replaced. Even though I'm the account holder of my IRA and that IRA holds the investment property, I myself can't go and do that repair
Mm.
because that would mean that the asset, in this case the investment property, would be benefiting from the sweat equity of me going and doing that. I really need to have a property management company pay someone a wage to go and make that repair. The other side of that is if I own that investment property in Anaheim, California, and it, I rented it out to tourists who were coming to Disneyland, and I wanted to take my family to that property, and I was going to go stay there because I wanted to take my family to Disneyland.
Mm.
I can't do that if it's inside of an IRA because now I'm benefiting from using that property. To take it one step further, not only can you not benefit, but anyone of lineal descent or ascent in your family cannot benefit. So, just like I have to keep things at arm's length, the same applies to grandparents, parents, spouse, children and their spouses, grandchildren and their spouses. So, using our example again, let's say we have that property in Anaheim and I'm going to rent it out to kids who are going to college down there, and there's four bedrooms, and I'm going to rent it out to three students, and then I'm going to have my daughter stay in the fourth bedroom, and she's going to live there while she goes to college down there. If it's owned in my IRA, she can't live in that house because she is of lineal descent and therefore is considered a prohibited person in that. So those are just things you have to be mindful of. And in general, we don't really find clients are trying to like break the rules. It's if anything, it's just kind of ignorance sometimes is what happens here. And part of how we can help people who are interested in doing this is just having the conversations when they're going to make an investment. When someone does make an investment, they're going to talk to our operations team because we have to review some of the paperwork. And during those conversations, it will come up. What are you doing? What's the strategy? Especially if it's real estate, we'll have those conversations to make sure it's going to be arm's length. You're not going to go stay in it. You're not going to go try to put up new wallpaper, things like that. Now, you talked about checkbook IRAs and checkbook control. Is where you have an LLC that's owned within the IRA. And in the case of CamaPlan, you would go and create that LLC yourself separately, and then that LLC would be owned within the IRA. And you, as the the administrator, the trustee of that LLC, you would have a bank account associated with it and literally have a checkbook that you could cut checks to for anything that happens within that LLC. The same kind of rules apply though. So the whole thing about not being able to go make repairs to your property or you can't go and stay in there, that all still applies. But now, because you are handling all of the transactions, we don't have any visibility into that. So that can be a good thing or a bad thing. People like it because it cuts us out as a middleman, so they feel like they have more control, they can manage things better, they like having more freedom. And that's good. If you are comfortable doing that, more power to you. But if you are new to self-direction, then jumping into a checkbook control IRA, that's probably not going to be the best idea because you don't want to get in trouble, and you don't want to make a mistake that could eventually put you into a less than fun conversation with the IRS. So it really depends on how comfortable you are with self-directed IRAs to begin with. You don't have to choose one and stay there forever. So maybe you just open up a regular traditional IRA with us, and then you do it for some years, and then you're like, okay, I can handle this. I know what the rules are, and then you jump into doing checkbook control. Sure. Something else to consider about checkbook control IRAs is that they are on the radar of Congress. Now, not on the chopping block necessarily, but the they do come up from time to time, and I think they were is recently being discussed seriously in 2022 or so, and Congress was thinking about getting rid of them. So, what would happen if they got rid of them? Not really sure, but it would probably be challenging. It would probably be messy. So,
Super messy.
we always say if you want to, you're already going to be putting in time to do your due diligence on these deals and all that stuff. Do you want the added do you want the added level of stress if something that's totally beyond your control, like the laws changing or the IRS tax code changing, and having to deal with that? Probably not. And so I guess that's my whole spiel about checkbook control. And going back to the whole not wanting the middleman there, I totally get it. Like you want to go and do things yourself and not have to deal with your custodian. Makes sense to me, but it's really not that hard to work with us. For
Yeah.
us, you sign a asset purchase directive when you're going to go deploy capital,
Okay.
or the other corresponding forms when you need to go pay for something. We turn things around in 48 business hours.
Nice. Okay.
We're a company of about 27 people or so, so we're still small enough that we answer the phone. We're readily available to help you out. So is it the same as doing it yourself? No, but is it so hard that you're going to be on hold forever? With CamaPlan, that's not the case.
Awesome. Good. So to take the example of the toilet, and I guess let's see, let's put the checkbook LLC to the side. But so I got a self-directed IRA. I bought a 20 unit multifamily. If you cannot self-manage, right? You're going to
Correct.
need a property manager. Property manager calls you and says, "Hey, the toilet needs to be fixed. Can you, or something that needs to be fixed." And what is the process? Like you said, there's paper where you just submit. I would submit something to you and say, "Hey, I need the funds released for obviously a toilet." They're probably going to have that property manager, you're probably going to set up some kind of cushion in there that they would just be able to say, make a decision. Hey, the toilet needs to be fixed. They don't need to call me for that. There's a hole in the roof. That's going to
Yeah,
be something different.
exactly. Exactly. So that whole like the decision making leeway that you give your property management company, that's all going to stay the same. It's just now how do the funds get to them when they need to cover that expense? And so using the toilet for example, they say, "Hey, we had to replace that toilet, so you need to pay $500, whatever it is, right?" And so then you reach out to CamaPlan, you fill out a form to release that money for that improvement on the property. We know that you're holding that asset in your IRA, so we we have that on our books, and then we send the money over to the property management company so that they can pay the subcontractor who needed to make the fix, or the handyman, whoever needed to make the fix. The other thing I'll tell you is I skipped over it is that when the titling of the property is not going to be to me, for example, if I own it through my IRA. So it's not going to be that Matt Moore is on the deed, for example. It's going to be CamaPlan FBO for the benefit of Matt Moore IRA
Okay.
because it's my IRA that owns it.
Right. So are the checks the money that goes, so you collect the rents, the
Mhm.
property management collects the rents, that money is going to be sent to you guys and then it gets what, how's that?
It gets sent to CamaPlan, and CamaPlan deposits it's deposited into the IRA that holds the asset. So then
Okay.
you have cash. You'll see, so now you'll have your asset that you'll see that you're holding, which is the property that we're talking about, and then you're going to have this cash that accumulates too from the rental income. That's good.
But
That's a good question because if you have a property, you have to pay for any kind of repairs from the IRA too. So you need
yeah,
to have some cushion there in case you do have to fix a toilet or a roof issue or whatever. So that's the other consideration is you need to, as you're thinking about buying a property and you say, okay, I'm going to buy this property and I'm going to put a down payment for $100,000 and then I'll have a loan for the rest, but I still need to be able to pay for things just in case. You're going to need to, number one, be able to have that money available within a retirement account to pay for it, but also you need to have it in a timely manner. So people are going to generally have that money inside of their CamaPlan IRA. You don't want to be you don't want to say, "Oh, I'm just going to roll it over for my 401k, an old 401k when I need it," because you don't want to tell the property management company you'll get paid in 2 weeks. You want to be able to pay them quickly.
right. You touched on a loan to maybe hit on what types of loans you can get.
So the main thing here is non-recourse. Non-recourse loans are the kinds of loans that you can use inside of an IRA, and you cannot be the personal guarantor on a loan because remember it's its own entity. Therefore, that's why it has to be a non-recourse loan with the for the lender who provides it to you. And it's common. It's not an uncommon. It's not a super specialized thing. Non-recourse loans are something you can find at a lot of certainly a lot of private lenders and even a lot of banks have them too, or national lenders. So usually what a non-recourse loan comes out to in the amount of funds that you can get is it's usually 5 to maybe 10% less. So instead of being 80 LTV, you're going to get 75 or just 70 LTV because it's a non-recourse loan because it's considered to be greater risk. And the other thing is usually the interest rate is going to be a little bit higher by about 50 bips. So instead of being 6.5%, it's going to be 7%. So just to consider that. But the positive news here is that you can use leverage to increase your IRA's buying power, just the same as you can use a loan or use leverage to increase your own buying power.
Cool. Cool. No, there are so many subjects that we could go down and talk about. But if you wouldn't mind, I'd like to jump on your website real quick and maybe
Sure.
we could show some of the people what you have and explain some other things. Okay. This right here, I thought this was a really good take control of your investments as you move from the government plan of forever tax to the plan of never tax. That to me, this right here is because just at the beginning of the years, I found out about self-directed RAs. And since then, I've tried to find out as much as I could. It was like, this is a fantastic thing. Why don't more people know about this? But I thought that was really good.
Yeah, and I'm glad you mentioned that because talking about owning real estate or lending from your IRA and doing all these things, it's not common and it's also not for everybody. So if you don't want to take control or have more control over your investments or do that due diligence, that's fine. It's not, like I said, it's not for everybody, but most people don't even know it's an option, like you said.
Right.
And some people even say, "Oh, is this legal? Is this legit?" Sometimes when I explain to my family at Thanksgiving what I do, they're like, "Are you sure about that?" It's totally allowed, and the IRS tax code has always allowed for a wide range of investments inside
Yeah.
of retirement accounts. But just as the industry has grown and you have financial advisors and employer plans like 401ks, they are vastly in the stock market and bond markets and public equities. And I'm not putting those things down or putting advisors
Right.
down. There's a place for them, but
Right.
there are other things that you can invest in with your tax advantaged retirement capital. And so most people don't know that this is an option and that they can have greater diversification in their portfolio and potentially access greater yields through private deals through retirement capital. And just in numbers, about there's about $18 trillion in IRAs alone. That's not 401ks, just in IRAs. And less than 5% of it are in self-directed IRAs. So
It's crazy.
that's just, people don't know that this is a
Yeah.
thing. And
Yeah.
it doesn't matter whether you're a teacher or a plumber or some venture capital person. I talk to them all, and a lot people don't know that this is a thing.
No, yeah, so we touched on owning property directly or owning or doing the buying notes. I just want to add to that you can do this passively. Like you said, that not everybody wants to do this or have that much control, but you can still use your self-directed IRA to passively invest where you don't have the syndication of a multifamily or there are I'm I believe there's companies you guys team up with that do notes if they wanted to go that route to where it'd be more or less a passive route that somebody wanted to go if they didn't want to be so hands-on.
Absolutely. And that those are the kinds of folks that I spend my days talking to, or people who are raising capital for a lot of real estate deals. And that is a an option for the person who maybe doesn't like the performance of their existing portfolio, or they want more diversification, but they're not ready to go buy an apartment building. They don't want all that to come with it. How do I get, for example, how do I get more juice than I'm getting in my current portfolio, but I don't want to basically have my IRA be the landlord? A multifamily syndication could be an opportunity. Or eh, I mentioned the things about like how everything has to be arm's length, and that sounds a little bit excessive. Like I don't that sounds like too much of a headache, but I can be a lender and I can just own the note and I don't have to worry about that stuff. Then that's another passive way to do. Yeah, to your point, it doesn't have to be so intense. There are other more passive investment options that allow people to maintain the passive relationship they have with their IRAs that they might currently have when they're at a Fidelity or Schwab.
Definitely. That you got a great website here, the resources. We can come over here and all the information that we talk because I'm sure that Matt and I could sit here and we can go down the road for hours because there's so many facets to this. You know, I mean, it's so interesting that, like we said, not everybody knows about this, and this is something that you can get out and diversify. To me, it's like the diversification of your portfolio, of your retirement, and
Mhm.
you're not stuck in this one plane of just stock markets or these bonds. You know, I mean, you can get it out there and really build something for the future. You know what I mean? You don't have to worry about what the world economy is doing because you're more localized. You can be more localized with your money,
Exactly.
through your
Or and
retirement.
you can be closer you can be closer to the asset. So
Yeah,
what do I mean by that is if you invest in gold ETFs or silver ETFs, that's good. You can do that, or you can have a self-directed IRA and own gold and own silver and actually have the actual asset,
physical.
physical asset
Yes,
held inside of your IRA. It's about really it is about control and having the option to do a lot more. And you're right, we could be talking about this for hours because just as vast as the topic is about, if I said let's talk about all the things you can invest in, right? That would be weeks or months or years long conversation. And
Yeah.
effectively, if you imagine all the things you can invest in, you can basically layer self-directed IRAs across a lot of that because you can do so much with a self-directed IRA. We have a client who owns a dump truck inside of his IRA and he rents it out to construction companies. I've heard of people owning racehorses inside of their IRAs. So there's a
Wow.
lot you can do. It's almost, if you can imagine it, you can probably do it.
You could probably do it. Right. So the resources on CamaPlan are excellent. If you have any questions, come here. The choose your plan. These will show you exactly what you can and can't do. It's very laid out very simply. And then also Plan has a YouTube channel and it is loaded. You can learn about many of these subjects that we covered. Are you the star of most of these?
I'm not the star of any of them, but I do host them and I definitely, we put the spotlight on someone else. We have a weekly webinar series that it happens at noon Eastern every Thursday. And we feature CPAs, attorneys, wealth advisors, and investment sponsors that we're working with. We generally have mutual clients with them, and it's just an opportunity for our clients or anyone in our network who wants to sign up to get some education about a certain topic, whether that's what do you do after you sell your company and you want to start building a family office, or how do you get into buying notes? Just there's a huge wide range of things that we discuss on there. So I encourage people watching this, if you want to learn more, definitely come give us a look Thursdays at noon.
Awesome. Awesome. Like I said, Matt, we could go on and on. I appreciate your time. And
So it sounds like what you're saying is this won't be the last time.
no, I hope not. No, I would actually, it would be super nice if you could sit here and we could pick one of these, like we said, pick one of these subjects. If you wanted to dive into the checkbook, or if you wanted to dive into a certain asset class, and you do that on the YouTube channels and on your website. But it's fun to sit here and listen to the stuff that you guys can do. It's awesome.
Definitely. Always happy to go into the weeds on different things.
All right. Awesome. So again, I thank you very much for your time and can't wait till the next time we do this.
Yeah, definitely. I appreciate the opportunity to talk to you about this. It's fun to nerd out on it. I get excited about it and I'm looking forward to the next one. So thanks very much for the opportunity.
Yes, sir. I appreciate you. Thank you.
All right, take care. Bye-bye.
You've been listening to CRE Deep Dive with Dennis Bamford. If this episode gave you value, share it with someone who's ready to move beyond traditional investing and into real assets. And if you're an investor, operator, or custodian actively working with self-directed IRAs in commercial real estate and have real experience to share, you can apply to be featured on the show using the links below. We'll see you in the next episode.